Good evening. This is the post-market recap by AGI Era. Today is Wednesday, December 24th, 2025, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a decisive victory for the bulls in what was a quiet pre-holiday session. The S&P 500 finished the day up 0.32 cent, settling at 16,932.5. Technically, the index is now trading comfortably above the psychological 6,900 level, showing resilience and a potential bid for new highs as we close out the year. The Nasdaq 100 also pushed higher, closing 0.27% higher at 2560.16. The Dow Jones Industrial Average finished up by 288.75 points. Crucially, trading volume today was lighter than average, which implies that this move, while positive, lacks the high-conviction institutional weight we'd typically look for. This is characteristic of a holiday week, but it's a point worth noting. The real test will come when the full market returns. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, is trading at 13.47. Despite the market's upward momentum, the VIX remains slightly elevated, suggesting that, while there isn't outright panic, there's a healthy level of hedging taking place. We are seeing a clear divergence in sector performance. Money flowed noticeably into the defensive utility sector, XLU, which was up 0.44%, while the growth-oriented technology sector, XLK, lagged with a smaller gain of 0.24%. This rotation indicates that even on a green day, Wall Street is positioning for a potentially slower growth environment, favoring safety and dividends over pure growth. The macro engine room. The primary driver of today's moves can be traced back to the bond market. The 10-year Treasury yield settled at 4.145%, ticking down on the day. This move is significant because it signals that bond traders are pricing in a higher likelihood of a slowing economy, which could lead to Fed rate cuts in the coming year. It directly creates a headwind for banks that profit from a steeper yield curve, but provides a tailwind for growth stocks that benefit from a lower discount rate. Meanwhile, the U.S. dollar index is up at 97.65, and crude oil is trading around 58.40, responding to a larger-than-expected build in U.S. crude oil inventories. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech. NVIDIA finished the day down 0.32% at $188.61. Microsoft closed up 0.24 cent, while Apple also gained 0.54 cent. Meta was a standout, closing up 0.36 cents dive. The weakness in NVIDIA is notable because it comes on a day of broad market strength. This could be a sign of profit-taking in the year's biggest winner as investors rebalance their portfolios heading into 2026. After hours and look ahead. Looking at the after-hours tape right now, shares of FGI Industries (FGI) are moving significantly, up over 6% in post-market trading. As we pivot to tomorrow, the economic calendar is light due to the Christmas holiday. However, investors should specifically watch the S&P 500's ability to hold the 6,900 level on low volume. Any failure to do so could signal a lack of conviction in this recent rally. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.